As promised, in studio with us, the ever debonair, the wonderful, the smashing, the charming. What else did you want me to say, Brian?
Just say good morning, Eric.
Brian Johnson with Valley Mortgage. Great to have you in studio with us. BJ, for those people just tuning in who have no idea who you are, give us a synopsis. Tell us about your family. Tell us about your business. Who the heck are you?
Well, Brian Johnson with Valley Mortgage. We've been around since 1983. We're a mortgage banker, so we're not a broker. All we do is home loans only. We do FHA, VA, USDA, conventional loans, first-time homebuyer loans. We do loans all over the Valley, Minnesota and North Dakota. I'm married, and I've got 2 kids. They're 7 and 3.
Okay, and your wife is
7 and 4.
Wow. Great parenting.
He just turned 4.
Really great parenting. And your wife is prettier, smarter, and nicer than you from what I've noticed?
Absolutely.
Yeah, well done. So obviously he's a great salesman. And Brian, your family is charming. I know you work hard and you work hard for them. What right now is happening in the real estate mortgage market? It's year end coming up. I'd imagine that things have halted and not many people are buying houses right now. Is that right?
No, not at all. Actually, it's starting to pick up again. So,
ooh, do tell.
Programs have changed a little bit this fall. FHA's tightened up a little bit of their guidelines.
Okay.
But on the
what does that mean for the Joe Blow average home buyer?
The biggest thing, there's 2 big things. Appraisals are a little bit tougher.
Okay, meaning that they won't get to the value, or that they're going to nitpick some items that maybe are going to have to be fixed?
They're a little bit pickier on items that need to be fixed.
Okay.
The home has to be in a very sound condition. The other big item that will prohibit people from getting approved is the student loan requirement.
Ooh.
In past FHA, as long as your student loans were deferred for at least a year, you didn't have to count those into your qualification.
Okay.
But now they've changed it, and you have to count a payment in that. So that will hinder some millennials, some first-time homebuyers from qualifying for an FHA loan.
So traditionally, if somebody's getting an FHA loan, that is the less sexy of the loan types. Is that a fair assessment for me to say? No,
case by case basis,
okay.
I guess, but no.
I guess we'll just determine what's sexy on a case by case basis. No, what I'm trying to say though is for the average consumer, traditionally getting a home loan is safer and easier with conventional, and FHA is oftentimes for people who maybe don't have as strong of credit.
Correct. Yep.
Okay.
Yep.
And so if you have the opportunity, would you always encourage and recommend somebody to use a conventional loan?
Not always. We
Ooh.
do look at credit as a big issue on what we look at, if it makes more sense to go with conventional versus FHA.
Okay.
Because that really can affect your payment if your credit score is below, say, a 700. So generally speaking, if your score is below a 700, you're probably going to get a cheaper payment with an FHA loan.
And that monthly payment, of course, is people always say, what does a house cost me? And people can say, I don't want to buy a $200,000 house because that's too expensive. We'll just use that as an example. But realistically, it's the payment that matters. And you're saying that people can oftentimes get a lower payment with FHA than they can with conventional.
If their credit isn't as strong and they don't have as much for down payment, correct? Yes.
Okay. So for the folks out there who are just tuning in, we of course have Mr. Brian Johnson in studio with us from Valley Mortgage, and we're talking about rates. You had mentioned off air, Brian, that some changes are happening with Freddie and Fannie. First of all, what are Freddie and Fannie, and what changes are being made?
Yep. Conventional loans are either classified as a Fannie Mae loan or a Freddie Mac loan, and that's the secondary market that kind of makes the rules and helps set interest rates to those are the programs.
That's the government is a fancy way to basically, it's a government program, or it's an institution of a sort that controls the lending world.
Sure. After the mortgage meltdown, the government took over both Fannie and Freddie, and they still oversee them. So
okay.
A lot of changes that happened recently that have loosened up are now with conventional loans, you can have a gift for a down payment. You used to have your own down payment money, but now you can get a gift. It's loosening up a little bit more too, where if you have, let's say you pay for your appraisal or you pay for things on a credit card. I've had people where they've had to pay back taxes on a credit card, and you used to not be able to use that as viable funds, but now you can. So they've loosened up some of the guidelines that they had tightened up so closely after the mortgage crisis.
Okay. So, Brian, if folks are out there and if they're wanting to get a home loan right now, is it a painful process to get through, or is it fairly easy?
No, it's fairly easy. If we can gather together some general information, tax returns, pay stubs, bank statements. We take a look at credit. We can usually get people approved or get them on their way within a day or so.
There's a common sentiment, at least it is for realtors. I'm sure it's not common in the regular world, but I've always heard 1 to buy, 2 to sell.
Mm-hmm.
What does that mean?
If you buy a home,
Yep.
Let's say you're married,
Mm-hmm.
you don't have to have both the husband and wife on the loan.
Okay.
You can just have one person buy it.
So if the wife has great credit and the husband has shoddy credit, they can still go ahead and procure and purchase a home.
Correct. If you're going to qualify just with the wife's credit, then you can only use her income then too. You can't use the husband's credit. So if you're both on the loan, then we'll use everybody's credit, everybody's income.
Mm-hmm.
But in certain situations, if you've got a better deal where you have a higher credit score, you can get a better rate and you can qualify with just one of the spouse's income. That's the way we may advise people to go.
So depending on who's on the paper, you're only as good as your weakest partner. If you and I get a loan together, Brian, and my credit score is 780 and you're at 630, our credit score is not the average of the two at 705, right? Our credit score is 630.
Correct. Yep.
Okay, so thanks for dragging me down. But if it's 1 to buy and 2 to sell, what is it? So 1 to buy means that you can just put one of the spouses on the loan. The other person's cash doesn't count. The other person's everything else doesn't count. But what about on the flip side of that, BJ? And it comes time to sell.
Then when you come to sell, since you're married,
Yep.
then you automatically have interest in the property. So you would have to have the spouse sign to sell the property.
Boy, bamboozled and hoodwinked. Your 630 snuck its way in, and now
That's
you
right.
still have a say in the house. And you should. Brian, we're running out of time here. People, if you're listening, you got to talk to Brian about getting a loan. At least find out what your credit score is, and Brian can help you out with all that. How can they contact you?
Sure. Give us a call at my office, 701-461-8450, or visit us online, valleymortgageinc.com.
Brian Johnson, thanks for sponsoring today's show. Thanks for being a dynamite guest as always. And those of you in the meantime, as we head to break, go to livefargomoorhead.com to find out what your home is worth. This is Real Estate Radio with Erik Hatch.